Yeah, because due to spreads, you will anyway get activated. Okay, because you will not be having it like this itself. You have to always factor in the spread. So if you factored in the spreads, you will get activated. Let's say maybe 3.2 pip stop loss, and you targeted the Asian high. The previous, not previous day, this was the, I think this was Monday or last Friday's Asian high. So you
Yes.
have a nice setup.
Okay.
See, a very clean setup. So that's it. Like, now don't think, okay, now I was wrong. Okay, we were completely wrong, because why? It was a bearish day. Okay, who cares? You made your money. Who cares if it
Yes.
was a bearish or a bullish day? Okay, no one cares. Okay, so don't think of it that way. Okay, yeah. And yeah, even in here, see this? Asia falls run in the opposite direction. So this is the Judah swing. Okay, this right here will be the Judah swing. Everyone starts to buy this. Look at how these trend lines and everything is forming.
Yeah,
London
liquidity.
open. Well, okay. Now, most people will be wondering, okay, now look at this. They will think we have the Asian high in here. Okay, we have the Asian high in here. This is where Asia ended. Now they will think, okay, since the Asian high was here, this is the high probability order block, right? They'll think this is the high quality order block, and then they'll try to sell it here.
Yes.
What happened?
Liquidated.
Clicked above that. Yeah, they got stopped out.
Yes.
Why
Yes.
did that happen? I told you,
Because
first look
everyone is
into
here.
the higher time frame. Yeah, not only that, look into the higher time frames. Just now remember, this is where the Asian high is. Okay, what did we have on the daily? What is this? An order block.
Order block. Yes.
The last push up before the push down. Draw a horizontal line. Okay, see that? Like this is why I told you, like the way we look at points of interest will be very different. Okay, will be very different. And now look at this. Now, what would you rather trust? Okay, a daily point of interest or as a 15-minute? Obviously,
Yes.
daily, right? Okay,
As a
obviously
daily.
daily. And then, yeah, you let this go. You let this go. Now, some people will call this maybe a smart money trap and everything, because why? A very clear order block, right? Or most people will try to sell it from here, because why? This is the supply that broke the structure.
Yes.
That is what you get taught, right? The supply that broke structure. That is the most
flip
important
zone.
one. Okay, yeah, the flip zone and everything. So now what they would do is they'll try to sell it here.
Oh, yes.
Okay, they'll try to sell it here, but for us, that is also liquidity. Okay, that is also liquidity, and then we will be selling it from the daily. Okay, don't worry. Once we talk about trading ranges, okay, you will anyway understand what this is. Okay, and then let's say stop loss was somewhere around here, 3.6 pips, and we target the Asian lows.
And how do you know price will not go higher in the POI?
Now this is the daily zone. Okay, this right here is the daily zone. There's no point of going anywhere around here once again, right? There's no point of doing that, because why? This was also a strong high. Stop hunt, breakout structure. Can you see that?
Yeah. I mean,
breakout structure.
I mean going higher, but in the white candle.
This, like going above this. How do we know it's not going to go above that? Okay, now first thing is it is a strong high, so we are anyway not expecting price to get above this high. So that's why I told you the safe place for the stop loss is above that high. But anyway, you don't want 8.7 pip stop loss, right? Okay, we don't want that. So then what you could do is you can even refine it to some lower time frame. Okay, you can even refine it to some lower time frame. If you really want to play it safe, you can have it somewhere around here, because even if they feel that imbalance, you are safe there. See that? Even then you are safe. Okay, but yeah, normally what I would do is once the higher time frame zone is here, okay, I'll just do something like this, just an imaginary stop loss. Okay, this is what I would do. Okay, yeah. Then let's see. We're expecting price to get here by, let's see, the London kill zone. Like this. Now everyone else will be marking this out, and expecting sales from here. Okay, so then what happened? This is all we need. Okay, there we go.
Inducement
theory. Yeah, that inducement taken out. London opens at 12:30 for me. Okay, London for me it opens at 12:30 p.m. Look at the time when it got tapped in, right at 12:30. Okay, right at 12:30, and then yeah, here comes the drop.
So that's it's London open.
Yeah, London opens at 12:30 p.m. for me. Okay, that's my time.
Okay.
And then, yeah, let me show you. You could have even, if you missed the sell, you could have even taken a buy. Okay, you could have even taken a buy. Where? From the Asian lows. Right below the Asian lows, what did we have? Okay, first thing is we had a strong low on the M15. See, stop hunt of a swing low, and a break of market structure. Strong low. This came and tapped into the strong low, started going up. Now the money might be here. We had the Asian low in here. Right below the Asian lows, we had the 1 hour rejection block. Can you see that?
Yes.
Okay, we had the 1 hour rejection block. Now you can buy it here. Stop loss can go below that. See, from the one now, we only have 3.1 pips. Okay. And then we can target all these highs up here. Okay, so let's see what happens. There we go.
Oh yeah, nice one.
Yeah, see that?
But
can messing around because it
we could think this entry is placed on a weak low.
Weak low? No, this is not a weak low. Because this is not a weak low because why? This came back down and actually tapped into the strong low once. See that? So which means they tapped into the order block. Now the money is in here. See that? The money is in here. And also, I told you what makes an order block high quality. Okay, what makes a point of interest high quality? Liquidity above it. See that? Now we have the Asian lows liquidity right above this point of interest. See that? Okay, that is what made it a high quality zone. Okay, then see a sell to buy, a nice sell to buy scenario.
This is what we call order flow, right?
Yeah, you can call it order flow and anything, but you understand the logic behind it, right? That is more than enough. Okay. Yeah. So we had that, and let's see what happened this day, maybe. Yeah, even this day, where do you think this came into? Okay, look at this. First of all, Asian high was a strong high, right? See, liquidity taken out, structure broken. Structure broken. Now, will you be looking for sales from here? No, because why? Almost equal highs, relatively equal highs. Can you see that? Liquidity. Okay, that we call it internal range liquidity. You can call it an inducement or anything. And above that, what did we have? See, this is where the liquidity is. And above that, once again, the base of the wick.
Oh, yes.
See that?
Rejection block.
Yeah, the rejection block. That is unmitigated. Okay, then what we could do is sell it from here. Okay, from the rejection block. Your stop loss can go, let's say above this high, only 3.3 pips. We place it above that high. See that? Okay, only 3.3 pips. And we target these lows. Okay, then let's see what happens. Now, there we go.
Oh, yes,
done.
Nice.
Okay, you're done for the whole day. Okay, that's why I told you, like, we don't have to go into lower time frames all the time. Okay, we don't have to go into the lower time frames all the time. And even this was actually New York. Okay, this was actually New York. The buy came during London. This was during New York. Okay, so we could have played the continuation with New York. And then even this day, where did this sell come from? Okay, where did this sell come from? We had Asia. Okay, we had Asia in here, right here. And right above Asia, we had an imbalance. Can you see that? Okay, we had an imbalance. That's why I told you the point of interest differs depending on where the liquidity is. Okay, so we have that, and we target the lows. Stop loss can go above that, 3 pips. What happens? Goes up, and there we go.
Oh, yeah, nice.
Very consistent. Okay, very consistent. If you targeted this low, you're done for the whole day.
So
okay, see now, I showed you the same setup every day now. Yeah.
This was also London Open.
This was also London Open. See, right at London Open. Look at the time. Right at 12:30.
Nice.
Right at 12:30.
Yes, that's nice.
Yeah. Let's see this day. This day. Let's quickly check where it came into. No, not there. Let's check page 1. Yeah, let's talk about that once we get into trading ranges. Okay. Once we get into trading ranges, I'll tell you where this came from. Okay, because we call this internal range liquidity, and this was the high time frame point of interest. So you could have even easily taken this buy. Okay. And yeah, even in here, this came into, I think, the H1 rejection block. This was the M15, but it came into the H1. See, London Open. Look at the timing. 1 p.m. Half an hour after London Open. Okay, so 1 p.m. So we had that. Let's see. This day, where did it come into? Yeah, Asian high wasn't even a strong high, but they failed to take it out, and they came into the Asian midline. See that? Right back into the midline, and then they started dropping.
But this was a strong low, a strong high that was taken here.
I have no idea. Which one? This one? This?
No, this one, yes, in the Asian range.
Actually, we had this as a strong high. Can you see that?
Ah, yes.
Oh, yes. Stop hunt. Yeah, I just saw it, honestly. Okay, a stop hunt and a breakout structure.
But the one that this one, that's a strong high too, because it took liquidity, right?
This one? Yes, no, this is a strong high.
No, the one at the left. Oh, sorry, my English is not good.
Yeah, that's okay. Yeah, if you could
lower.
annotate, it would be better. Yeah.
You think
you
I can do something with my mouse?
Yeah. See, like if you tap the top of the screen, you can see something like a pencil tool, I guess. Yeah.
Let me search.
You might have a pencil tool or something.
Oh, I don't get it. What? Oh, never mind.
No?
Never mind.
Okay, so which high were you talking about? This?
Where you draw the line of liquidity?
This?
Yes, this was
this high?
This high is a strong high, right? No?
This high? No, this high is not a strong high because why? No swing high was taken out. Can you see that?
No swing.
Yes. No swing high was taken out. Did you see that? Okay, so then it cannot be a strong high, right? Okay, then it cannot be a strong high.
Yes, okay.
Yeah, you understand that, right? Okay, then it cannot be a strong high. Okay.
It's okay.
So then this was liquidity. Even this right here was liquidity. Came right back into the midline and then it started dropping. Okay, could have been a nice trade if you sold it here from the midline and you targeted this low, just one candle, okay, right into profits. We have that. Even this day, where do you think this came into? Higher time frames. Okay, look at all this pool of liquidity. Look at this. Liquidity, right?
Oh, yes, a lot of liquidity.
Above that, what did we have? The 4-hour imbalance.
Yes.
Okay, and you could have even refined it into the rejection block. Can you see that in here?
Yes.
Okay, only a slight refinement. Okay, we're not going to refine this imbalance into up here. That is too much. Okay, no, just a slight imbalance, a slight refinement like this. See, only 1.6 pips. Okay, we can do that. And then what we do is let's say we set our sell limits here, expecting price to get here by London open or as the London kill zone at 11:30. Okay, so those are the times that we will be active in the charts. Okay, remember that too. London kill zone to London open. Okay, those are the times where we will be active in the charts.
What is London kill zone?
London kill zone is actually the Frankfurt session. Okay, the Frankfurt session. Okay, yeah, it's the Frankfurt session. Okay, so ICT cost is the London kill zone. Okay, we can also call it the London kill zone. Okay, so like this, let's say a stop loss was, let's go into a lower time frame to check where we can place a stop loss. Yeah, we had a candle in here. Let's say we had the stop loss above that. Actually, the stop loss placement is completely up to you. Okay, it's about how you want to place it. Okay, it's about how you want to place it. So that's okay. And then look at these trend lines and stuff. Can you see that?
Yeah.
Okay, we can target that. Then let's see what happens. Okay, there we go. Yeah, this happened early. Yeah, this happened a little bit early, but let's see.
Oh,
there comes the drop. Okay, you could have even taken the buy here. Okay, you could have even taken the buy here. Let me show you.
Yes.
Let's say you target the Asian lows. Let's say you target the Asian lows. I actually had the buy. Okay. What is this? Equal lows.
Yes.
Right.
Liquidity.
And below that, what did we have? H4 rejection block.
Yes.
See that? Buy it.
Okay.
Stop loss below the rejection block. See on the 4-hour time frame, but your stop loss is only 3.6 pips. See that? From the 4-hour. Okay, only 3.6 pips.
Yes.
Yeah, from the 4-hour itself, you have only 3.6 pips. See, that's why I told you it's a price level. Okay, it is a price level. See, now, do you think if you post a screenshot like this, people will have any idea what this is? No, right? What is that line? No idea. Okay, because they are not even looking at the higher time frames. Okay, everyone will be so focused on the higher time frames. Okay, so we know that this is price level. This is a price level. Then what happens? Drops and goes up. See that?
Oh yes, nice.
Okay, a nice buy, a nice little buy. This was actually London. See, like 2 hours after London. Okay, so a nice ping pong day. You could have taken the sell, you could have taken the buy, and you could have even taken another sell from